fundsupermart.com.
With us today is Michael Yi, Senior Vice President and Portfolio Manager at Allianz Global Investors, to share with us his investment approach. Hello, Michael. Thanks for joining us. So, where do you see the U.S. market going in the second half, and what are some of the main catalysts?
Well, as we take a look at the U.S. market right now, specifically the credit markets, and more specifically the high yield market, we're very encouraged by what we see. Spreads right now are about 462 basis points over treasuries, and we feel that there's an opportunity set still within high yield. But in addition to that, convertible bonds offer a very good opportunity set as well. But more constructively, the balance sheets of corporate America are very strong. The corporate leverage is very low, the cash on the balance sheets is very high, and the ability for companies to service their debt are very good and improving. And so that means that the credit markets are very good and we are very encouraged. Secondly, as we take a look at the equity markets, coming out of the first quarter earnings season, we saw confidence and a confirmation that earnings are being achieved and expectations are being beaten. In fact, if we take a look at the S&P earnings from Thomson and Reuters, over 79% of those companies in the S&P 500 either met or beat corporate earning expectations. So that for us is very encouraging. So in the back half of the year, we would anticipate continued strength. There is no crisis with respect to credit. That's a solid foundation. And then we believe that companies will continue to earn and outperform.
So, regarding the recent news, what's your take on Fed's QE exit, and what are the implications for the U.S. bonds and equities?
Well, certainly. The QE3 tapering has been in the news, but if we were to look back last month or a couple months before that, the hot topic was sequestration, or before that, the topic was fiscal cliff, or even before that, there was European issues. So from a macro standpoint, that's not how we invest. We always look at companies first, and we always rely on company fundamentals to tell us what's going on. And as we take a look at company fundamentals, we still see a lot of strength. But with respect to your question about QE3, we would expect a little near-term volatility until the market digests exactly the magnitude or when the Fed will stop buying back paper. As that information is digested in the marketplace, and as people refocus their attention on company fundamentals, that will be the drivers of performance going forward.
And finally, can you share with us more about how a balanced strategy works? What's the investment approach, and where do you find the best opportunities in both the equity and bond space?
Sure. One of the strategies that we have is an income and growth product, and therefore we've broken that portfolio down into 3 different asset classes. One of them is a third high yield bonds, one of them is a third convertible bonds, and the last third is equity, large cap equity more specifically, with a covered call strategy. This is a very unique 3-sleeve approach that uses multiple asset classes to create a product that has the consistency of a monthly distribution, but in addition to that, we can also create a portfolio that has very good upside with limited downside buffering capability. And by that I mean we want an asymmetric return, whereas when the equity markets go higher, the asset classes that will participate are obviously the equity as well as the convertible bond sleeve. But then if there is any kind of equity downside volatility, the credit buffering from the high yield sleeve as well as the convertible bond sleeve will really take into effect and have limited downside participation. And so that downside buffering that we're talking about. So there's a lot of opportunity sets with respect to new investment ideas, whether it be in the convertible space, high yield space, or equity space. But going forward, we feel there's a lot of strength across the board.